Good evening, everyone. I welcome you all to the product presentation on securities lending and borrowing. In case you have any queries during the presentation, please type it on the chat box. This chat box the is at the Zoom panel, which is generally at the bottom of your screen. So, what is securities lending and borrowing, or SLB in short? These slides give a gist about what SLB is all about. SLB, or Securities Lending and Borrowing, enables lending of idle securities by the investor through clearing corporation of the stock exchange, wherein lender earns lending fee and the lending fee is paid by the borrower. So if any investor has stocks in their demat account and these stocks are for medium to long term. When I say medium to long term, it is, let's say, a holding period of more than 90 days. And the investor wants to earn an extra alpha on their portfolio or an extra income. Then the investor can participate in securities lending and borrowing, or SLB, by lending their stocks on the exchange, which is NSE or BSE, and earning an extra income on their portfolio. This flowchart will help us understand a bit about the way it operates. The lender is the original owner of the security. So the lender lends the shares to the exchange. When I say exchange, it is NSE or BSE. And from the exchange, the shares goes to the borrower when the trade is done. So assuming today is the trading day and a trade has happened where, let's say, one single share of Voltas has been lent by the lender or the original owner of the security. So Voltas shares from the demat account of the lender or the owner would move to the exchange and then move to the borrower. The lending fee is paid in advance, which comes from the borrower to the exchange to the lender. And the shares on the first Thursday of every month, which is the settlement date, the shares from the borrower moves to the exchange back to the lender or the original owner of the security. In this slide, I have put a few examples trying to show different types of trades or trades which can be done on the SLB platform at the exchange. So what I've done is I've taken 2 or 3 quite nearby dates. So which is 27th of April, 25th of April, and 29th of April. And let's say I've taken one single stock. So let's say if we look at the first one, which is Lalpath Lab on 27th of April, which closed at 2786. There was an opportunity to lend on the exchange platform at 50 rupees per share, where the series is X6. X6 means June, and X is, there are 2 series which are available for SLB at the exchange platform, Series A and Series B, which is the old one and the new one. So X6 is the new series where the settlement date is 2nd of June 22, which is the first Thursday of June. And the number of days becomes 36. Why 36? Because 2nd of June from 27th of April comes to 36 days. So for 36 days, if somebody is holding Lalpath Lab in their demat account, on 27th of April, there was an opportunity to lend at 50 rupees per share. Same on 27th of April, same stock, And surprisingly, even the fee, which is 50, was same, but generally it is different. There was a rollover opportunity also. So that is why the series now become Y1, which is X5 to X6. So it goes from May till June. And the number of days, because from 27th of April till 2nd of June, which is X6, it again becomes 36 days. Now, what does this mean is, if you have already lent Lalpath Lab on the exchange platform earlier, so on 27th of April, you had the opportunity of of rolling it over to the next series, which is X5 to X6. The third one, which is on 25th, the third example, 25th of April, again the same stock, Lalpath Lab. That time it was trading or it closed at 2,724. The lending fee is 5 rupees 50 paise per share for series which is X5. X5 is the May series, which is 5th of May 22 is the first Thursday of the month, the settlement date, and the number of days become 10. So what we can understand from these three examples is, on very close by dates, which is 25th or 27th, an investor has the opportunity of lending the stock for a short duration, which is 10 days, for a longer duration, which is 36 days, and also understand that not only fresh lending, but also there are rollover opportunities which are also simultaneously available. Generally, the rollovers happen at a price which is better than in case you want to do fresh lending generally. The next example is on 29th of April, Adani Port, which closed at 856. The lending fee opportunity was 1 rupee 50 paise per share, and the series is 5. So if you notice, we have talked about the X series, which is X1, X2, X3, X4, X5, X6, which is the new series. And there is a series which is numerical number 1, 2, 3, 4, 5, 6. So 5 is 5th of May. X5 is also 5th of May. So 5 is the older series. In case of older series, in case of, let's say, for example, AGM or voting rights, such scenarios, the stocks are the trade is foreclosed and the stocks come back to your demat account such that you can participate. Now, if you look at this opportunity from 29th of April till 5th of May, it comes to 6 days. And the last one, on 29th of April, Metropolis, which closed at approximately 2,400, the lending fee opportunity was 91 rupees per share. Series is X6, 2nd of June, and the number of days now becomes 34. Why 34? Because 27th of April till 2nd June is 36. So 2 days hence, it becomes 34 days. So what it also emphasizes is the settlement date remains constant, and as you are nearing or nearing to the settlement date, the number of days becomes lesser and lesser. So first is I can see in the chat box is clearing corporation is exchange or depository. See, first is uh, the depository is where the stocks are there. Okay. When I say exchange, it is the clearing corporation of the exchange. So exchange also, if we look at it, it can be divided into two parts. One is which looks after the trading, and the other which looks after the clearing and settlement. The second question which I can see is there any maximum number of days of an SLB? So yes, uh, uh, if I put it, let's say you have lent your stocks today, okay? Now the first Thursday of the month. So if I look at the trading pattern or the volume, The duration of the trade is varying between 15 days to approximately 45 days generally, where the bulk of the volume happens. That is one. Second, you can keep on rolling it over. Okay. So when you roll it over, you can roll it over till 1 year hence. Okay. But once you roll it over for 1 year, then the stocks have to compulsory come back to your demat account as per the rules which have been specified by the exchange. So if I look at it, the maximum number of days one can calculate between today and the settlement date when you are when at which date you are lending your stock. And at any point in time, there are 12 series which are available, so you can lend till 1 year hence. But the liquidity is not there, so the liquidity is generally in the nearest month. So the first Thursday of the nearest month and the second month. So that is where the majority of the liquidity is. So henceforth, generally we have seen the maximum number of days may come close to around 45 if I look at the liquidity criteria also. So please feel free to type your queries on the chat box. There is one more query, which is what do you mean by foreclosure? So today, let's say we have lent one single share of Adani Port, okay, and the series is 5. The fourth example, which is there on the slide. Now the lending fee is 1 rupee 50 paise per share. Now on 29th of April, the trade was done. All of a sudden, let's say there is an AGM which is happening before 5th of May. So let's say on 1st of May, due to some or the other reason, generally it isn't there because the companies, when they intimate to the exchange, there is a certain number of days which are available. But let's say in an unusual special circumstance, it has happened on 1st of May. So then uh, for here, which is the older series, the deal would be foreclosed. That is step one. That is, it would be cancelled. And from 29th of April till 1st of May, so on a pro rata basis, the lending fee would be reversed. So basically, the lender who has earned 1 rupee 50 paise on a pro rata basis, on a proportionate basis, uh, a certain amount of lending fee would have to be given back to the borrower, and the stocks will come back to you such that you can participate in that AGM or that voting right scenario. Okay, so this process of closing a trade is a closure which happens. The next query is, what is the legal documentation involved? So yes, as we go along, I'll also answer that part. But in terms of legal documentation, it is if I put it, it is with respect to the account opening form. Okay. So there is an account opening form which, in case you want to participate in the SLB segment at the exchange, so you have to open an account with a broker. PhillipCapital is one of them. And once the account opening process is done, the account is opened. And generally what we advise is that you should also open a demat account at PhillipCapital, and the stocks which can participate in the SLB segment should be kept with PhillipCapital. And the reason is simple, because here the settlement date is T+1. So the clearing and the settlement becomes much more easier. So the account is open, the stocks are there, and as and when the opportunities are there, one can easily lend it at the exchange platform. The next question which is there, are the offers made by the borrowers only? So yes, I'll show you a slide wherein you will be able to also gauge the kind of bid and offer which is there. So even the lender can put their own prices, the borrowers put their own prices, and when the matching happens, then the trade is done. So I'll show you one screen which will help you understand that. Now, going to the next slide, this is the data to help us understand uh, in terms of the opportunities which are there on the SLB platform at the exchange. So here the data I have taken is only of NSE, but you can also get the data for BSE also. So what I have done here is I have taken monthly data, which is available at the NSE website. And I've just taken two scripts out of the full list. So let's say if I talk about April 2022 month, okay, there may be around 250 scripts which have participated in the SLB platform at the exchange. So out of that 250, I have taken, let's say two, which is Apollo Tyre and Metropolis. So now, if you look at November 21, Vedanta and Epka Lab, you can see the quantity which is there for Vedanta. It is approximately 74 lakhs. IPCA is approximately 3 lakhs. The kind of lending fee which has been generated, the turnover which is there, the weighted average yield. So, which can also be seen for Vedanta, it is 28, IPCA is 26. And the last, which is you can see, is the count in terms of number of trades. So count of trades, you can see some for Vedanta, it is approximately 2,400, and this is approximately 450. Now, what we can make out one is that there are opportunities which are there, which can give you a weighted average yield, which is quite lucrative. That is one. Second, in terms of count of trades, it is lesser. So what it means, it requires more amount of tracking. So at PhillipCapital, we have developed systems to track your stocks and to intimate those whenever there's an opportunity, to intimate the opportunity to the relationship manager, and then the relationship manager also communicates the same to you. So we have developed systems to help track the stocks which can participate in the SLB platform at the exchange. So that is also one of the reasons why we say that in case you have your demat account at PhillipCapital, it is quite helpful. Then in December, let's say GMR Infra or Hindalco was there. The weighted average yield is 24 and 15. Or in January, it is Idea, India Mart. Or in Feb, it is Indus Tower, Escorts, or L&T Finance, or IRCTC. So you can see the kind of turnover, the kind of lending fee which was generated, the quantity for the month which got traded, even in count in number of trades, or the weighted average yield. So this can give you a good amount of perspective with respect to one, which is variety of stocks generally participate. One, two, sometimes even the weighted average yield can be very good. Three, now to capture such weighted average yield, what generally investors do is they scatter their bid. So which is one of the questions which was asked. Yes. So lenders also, let's say the prevailing price is 10 rupees per share. So they'll put 1,000 shares at 10, 1,000 shares at 11, 1,000 shares at 12, and so on, such that they can participate in the market. So that is generally the strategy which most of the investors do. And also in counted number of trades. So this also highlights the fact that at PhillipCapital, we have developed systems wherein the tracking of your stocks can be done better, and you don't miss out an opportunity, because sometimes there might be illiquidity in the SLB market. Now, one question which is there is what is the legal document? So that I've answered. Then are the offers made by the borrowers only? So that is also something which I've answered. Okay. Then the next one is it necessary to open demat account with PhillipCapital? Okay. Now, see, one is it is not compulsory to open demat account at PhillipCapital. But yes, I would strongly advise. The first reason is ease of operation, because you can easily, because here the settlement date is T plus one. So most of our investors do an early pay. In case you don't do an early pay, so you have to put in a margin of 25%. That is one. And the next day by 9 a.m., the stocks have to reach the exchange. Now, in case it doesn't reach the exchange, the penalty on the lender or the owner of the security is very steep. It is 25% of the cash market price. So that is why we always prefer and always suggest and always advise all our investors who plan to participate in the SLB segment to have the demat account at PhillipCapital, such that they can easily operate whenever they want to trade. So yes, there are a very few instances where the demat account are outside, but for them, I guess that there are people running around for them who can put who can give the slips and transfer the stocks. Uh, the next question is how turnover is calculated. So turnover is quantity multiplied by the cash market price. So that is how the turnover is calculated. Can we receive the Word document PPT or your presentation video to study? So yes, what we have done is one, please contact your relationship manager or the salesperson who have invited you for this presentation. So they can give you the one pager of securities lending and borrowing. They can also send you the link where a recorded presentation is uploaded to help our investors go through that presentation at their convenience. And further, even if there are any queries which are there after this presentation, we can also do a one-on-one meeting to clear those queries. So please feel free to type your queries on the chat box. Now, coming to overview. So this is an exchange traded product. The regulations were originally formed by SEBI in May 1997 and last modified effective Jan 2018, though there have been minor modifications hence also. All market participants in the Indian securities market have been permitted to lend and borrow. And why to lend? It's very easy to understand, because when you are the owner of the security, you get an incremental return on your portfolio by lending your stocks, where your counterparty is the exchange. So that is also very important. The next is why borrow. So first is reverse cash and carry arbitrage, or what it is also called as unda badla, is where the futures are trading at a discount compared to the cash market. So if you what borrowers do, since they don't have that stock, they borrow the stock from the exchange, and the counterparty is you as a lender. And let's say the difference between cash and the futures is 10. So out of that 10 rupees, they give you a certain amount of lending fee. So that is one of the prime reasons why SLB is active in India. The second one is to sometimes also to cover short position or to avoid settlement failure. And the third is the demand due to physical settlement. Okay, so that is also there. If you look at the volumes and the kind of stocks which are trading on the SLB, especially on the settlement on the derivative settlement near to the derivative settlement date, so we can even understand that. So a good amount of stocks also happen due to physical settlement. There is protection of rights as owners. It's a screen-based anonymous trading system. Now, coming to the international markets. So this is a study which was published by ISLA a few years back. And if you see those numbers are quite huge compared to the volumes which is happening in India. So the value of on loan balances globally, okay, over the 6-month period to just about 1.9 trillion euros. Okay, and the supply of assets moved to just over some 16 trillion euros. So compared to that, India is a very small market. But one of the advantage of India is your counterparty is the exchange. As internationally, in the SLB market, it does happen that it is the custodians who act as the counterparty. But in India, the comfort level with the exchange is much higher, and your counterparty is the exchange. So that is one of the big advantage of SLB in India. Now, on one side is the lender, on the other side is the borrower. So now we are going in further in detail. So first is, as a lender, if you lend your stock, okay, today, and you do an early pay-in, that is your stock are there with PhillipCapital, and there's an early pay-in which happens. So then there is no margin which is to be paid by the lender. But in case there is no early pay-in, that 25% of lending price and mark to market at the end of the day is a margin which has to be paid by the lender. So that is one. If we turn towards the borrower side, on T day, on the trading day, 100% of lending fee is to be paid. And on T+1 day, 100% of lending price, VAR, ELM, and M2M at the end of the day. Now, what does this mean is, I'll quote one example. Let's say there is 10 lakhs worth of shares of Voltas, which has been lent by the lenders to the exchange, and then borrowers borrow it from the exchange. Okay. So for 10 lakhs worth of share, this 100% of lending price, VAR, ELM, this figure may come close to 1.25 times, which may be approximately 12.5 lakhs. So a borrower has to keep margins with the exchange for borrowing the stock, which may be around 1.2, 1.25, 1.3 times of the value of the stock. Now, one of the questions which may come to your mind is that if the borrower has so much of money, why borrow then? Why not buy it from the exchange? So here, they don't keep money as margins. They can keep something like a fixed deposit. They can give sometimes there are a few stocks which can be given as margin to a certain amount of extent, or they can also be other instruments like, say, liquid Bs, which can be given to the exchange. Okay. So there are different instruments which can be given to the exchange, but to understand, it's simply for 10 lakhs worth of stocks which a lender lends, a borrower may have to park initial margin to the tune of 12.5 lakhs. Now, this is one of the, I'll say, a very important slide of this presentation. And I can see, yes, I can see a query here. So are there any costs involved for lenders? So yes, I'll be also talking about the cost in the next few slides. So this is, and the next query which is there, that what does VAR and ELM? Yes. So see, ELM, for example, extreme loss margin, or there's a VAR margin. So basically, there is a margins which is applicable on the trades which you do. So whether it is a cash market trade or a derivative trade or an SLB trade, okay, because they can be overnight. Stocks may be settlement is happening overnight. Okay, so there are to minimize the risk. There are margins which is applicable on the trades which are happening. So that is one. So in case of securities lending and borrowing, okay, from the borrower side, if I add these numbers, okay, VAR and ELM and even a mark to market, it may be approximately 1.25 times the value of the stock which they borrow is basically they are keeping as margins with the exchange, or their margins are getting blocked. So the margins are already there when the limits are given. So it is basically getting blocked. So coming to this slide, which is an important slide since the font size is slightly lower, because what I have done, I have taken from the NSE presentation and pasted it out here. So I'll just read some of the important things on this particular slide. So T day is the trading day. Okay. On the left hand side is the lender. At the center is the exchange, which is NSE, and right hand side is the borrower. Now, on the lender, as we discussed, in case the lender does early pay, okay, then no margin is applicable. Else 25%. So which is the left hand side top box. Uh, Borrower pays 100% of lending fee. So this is real time is blocked from the collateral which is given. Okay. On T+1 day, now the second point, even in case there is default of the borrower, okay, exchange will still pass on the lending fee payout by 11:30 a.m. Okay. So what it is saying, that even in case there is a default by the borrower for the lending fee, okay, still it would be paid out by 11:30 a.m. by the exchange. So that is one. On the right hand side, if you see from the borrowers, point number one, lending fee paid by 9:30 a.m. Okay, securities payout by 11:30, and the margin is 100% of lending price, VAR, ELM, and mark to market, which we discussed on the last slide. Okay, now on the reverse leg date, which is the first Thursday of every month. Okay, so here we'll just elaborate with an example to understand these pointers. So on the T day, let's say as a lender, you have lent 10 lakhs worth of Voltas and the borrower has borrowed from the exchange those 10 lakhs worth of Voltas. So now what they have done, the borrower has given a margin of approximately 12.5 lakhs. Let's say it's a fixed deposit which has been given. Now, come to the reverse leg day, which is first Thursday. Let's say the T day is 1st of April and the reverse leg date is, let's say, 2nd of June. So let's say it is 32 days. In 32 days, the value of the Voltas, let's say, doubles. So 10 lakhs has become 20 lakhs. So even the mark to market has to be paid by the borrower. So now the margin which is blocked, because the value of the stock has moved from 10 to 20, is now 25 lakhs. Okay, for simplicity, I'm just putting those numbers. So today is the first Thursday of the month. With the exchange, there is margin of the borrower to the tune of 25 lakhs and the value of the stock is 20 lakhs. So now by 11:30 a.m., the stocks have to come back to your demat account. So the exchange takes those stocks from the borrower and gives it to you by 11:30 a.m. Now, just in case the borrower fails to give the stocks, because the paying of the securities have to happen by 9:30 a.m., let's say the exchange finds that the borrower hasn't given the stock. So now what will happen? So exchange, the value of the stock is 20 and the margins they have is 25. So the exchange will go to what is called the auction market, which starts at 2 p.m. and try to get those stocks from the exchange platform. So generally, if you see on the auction market, the premiums may be 0.1%, 0.2%, or even in some cases 0.5 also. But the liquidity is generally very high because we are talking about the most liquid stocks on the exchange platform where such a scenario is happening, or where the SLB is being traded. So it will get those stocks, and in case it get those stocks, it will give you the stock on Friday instead of Thursday. So that is one. Just in case exchange is unable to get the stock from the exchange, okay, so then what will happen on Friday, though there's a formula behind it, but for simplicity I'm putting it, 20 lakhs is the worth of the stock, multiply by 25% closeout. So 1.25 times of 20 becomes 25 lakhs. So 25 lakhs would be given as payout to you as the original owner of the security, okay, where the value of the stock is 20. Okay. So this is what is reverse leg date and reverse leg day +1. Only in case the borrowers default on the R day, the process which has been explained or which has been put by the exchange, right? So if I put it on T day, the trade happens, borrower has to give initial margin, mark to market margin. The reversal happens on the first Thursday of every month. And let's say on first Thursday, in case the borrower defaults in terms of giving even partially, the stocks. So the exchange is first go to an auction market. In case it doesn't get in the auction market, so then it would uh, it would give you a payout amount, okay, which is a closeout amount, which is 1.25 times of the close price, the Thursday's close, so which in this example came to 25 lakhs. Now here, one of the point which is important is that since there is no STT being paid in the transaction, so it's an off-market sale, so their taxation would be applicable. Okay, so that is something which you have to keep at the back of your mind. So I can see, yes. So how the exchange gets stocks in the auction market. So in case of, it's the same process. So exchange just participates on the auction market uh, in terms of getting those stocks. Then the next question is, can the borrower use their collateral if the value of the borrowed stocks fall? Now, this is a very interesting question. So the way it works is, uh, 10 lakhs is the initial value of the stock. Okay, so the amount of margin is 12.5. Okay, the collateral which is blocked. Now, let's say the 10 lakh becomes 12. So now the margin block is, let's say, 15 lakhs. Okay. Now, in case from 12, the value of the stock comes back to 10. So again, it becomes 12.5 lakhs, the collateral which is blocked. So 2.5 lakh is released. But in case it goes below 10, then the collateral are not released below the 12.5 lakhs. Okay. So that is how the exchange operates. So generally, the amount of margins which is lying with the exchange is much higher compared to the generally what the figures are. Okay. So coming to the product specification. So there are 12 monthly contracts which are available. The trade timing is from 9:15 a.m. till 5 p.m. More than 500 securities. So right now, even the list is greater than 600 in number, which can participate in the SLB segment. All derivative or the FNO stocks, eligible non-FNO stocks. So something like, let's say, Adani Green or Pfizer also participates in the SLB segment. Then there are ETFs which can participate in the SLB segment. Now, the type of order, you can lend, you can borrow, you can recall, you can repay, and you can roll over. So we have talked about lending, borrowing, and rollover. Now, recall is, let's say you have given 1,000 shares, you want 500 shares back. So you can even recall the security. The quote is lending fee per share. Now, coming to position limits. So though it's quite huge for a retail investor, but just to put it in perspective, the market-wise position limit is 10% of the number of shares held by non-promoters in the security, and the client level is 1% of that market-wide position limit. The reverse leg is the first Thursday of every month. So let's say 2nd June or 7th of July is the reverse leg date. The settlement is on gross basis, and the last trade date is 3 days prior to the settlement date. So I have a query here, is what means by position limit? So position limit is maximum which one single client or a PAN number can lend it on the exchange platform, the number of shares. Okay. So let's say if there are total 100 is the shares which are there in for a company. Now out of that, let's say the promoters are 50% and the non-promoters are 50%. So it becomes 50 shares. So 10% of that 50 is 5, becomes a market wide, and the client level is 1% of that. So that is how to calculate the position limits. Though it is quite bigger number, but for simplicity, I've just quoted that example. Now, coming to the corporate action part. So all the corporate action are designed by the exchange such that the original owner is benefited. So how it does that? In case your stock has moved out of the demat account and gone to the borrower, a borrower may have sold that stock or kept that stock depending on the scenario. But whenever there is a dividend, the dividend amount is collected from the borrower by the exchange and paid out to the lender on the book closure start date itself. So that is one. In case of stock split, so let's say face value 10 becomes 1, you have lent 1,000 shares, 10,000 shares comes back to you on the reverse leg settlement date. Okay. Any other corporate action, which includes rights, bonus, or any other corporate action, the deal is foreclosed. Okay. And the stock comes back to you such that you can participate. Okay. Now coming to the taxation part. So one is STT or securities transaction tax is not applicable. SEBI turnover tax is not applicable. And in case of closeout, it would come under the purview of capital gain tax rule. So which is what I was talking about. Let's say if the borrower doesn't give the share on Thursday, it goes to the auction market, then it goes to Friday. And let's say you get a closeout amount, which is 1.25 times the value of the stock. So it can come under the purview of the capital gain tax rules. Uh, just for your knowledge, the borrowers have to pay a GST of 18% on the lending fee. Further, I've also taken a query from the NSE SLB FAQ, the Q&A. So which basically, will the lending or borrowing of securities under security lending scheme will amount to transfer under clause 47 of section 2 of the Income Tax Act in the hands of the lender? So the answer is, as per clarification from Income Tax Wide Circular 2/2008, dated 22nd Feb 2008, transaction done in SLB shall not be regarded as a transfer. Now, this is the screen which I was talking about in one of the replies to the earlier queries regarding the bid and offer. So at the exchange website, you as an investor can also go and check the prices, though we are doing at our end also with respect to the stocks which are there, our client stocks which are there in the demat account at PhillipCapital. So we have built systems in place to help the relationship managers do that. So the best bid, so let's say MRF, the best bid is at 1,100 rupees. The best offer is at 1,300. The trade has happened for 1,300. This is an annualized yield of 23%. Okay. Then Lalpath Lab or Atul or IRCTC, IPCA Lab, JK Cement. So these are all the stocks which have participated. So I just took a screenshot to help you understand. So if you go to NSE India, you go to Market Watch of SLB and you can find the screen. At the top is the left-hand side is the filter, which I put June 22. So there is Series A and Series B. So I've taken Series B because Series B is more active than Series A. Series B is where is X1, X2, X3, X4, X5, X6. Now, the SLB exchange turnover. So if you see on a monthly basis, average approximately 2,000 crores is what is happening at the NSE, and approximately 500 crores is happening at the turnover at BSE. This is a confirmation which you receive at the end of the day. Okay. And this is something which we have done at our end. So what we have done is SLB back testing data. So if you share your portfolio with us, we can, on a conservative basis, we have developed a software which can help you back test. So what we have done is, let's say at 4% annualized yield only, if you would have lent the stocks whenever there's an opportunity of 4% or better, then what is the kind of lending fee which you can generate on the stocks? So that is something which we can do and very easily send it across to you for your understanding. So with this, I come to the end of the presentation. We'll just wait for 20 seconds and then I'll start answering the queries which are there. Yes. So the first one is one trade is equal to lending plus receiving back the shares, or one trade is only lending and one trade is receiving back the shares. So the whole process of lending and borrowing will be counted as two trades. Okay, that's a very interesting question. So see, first is uh, when you lend your shares, okay, and yes, there was a query also about the cost, so which I'll also elaborate. So when you lend your shares, okay, on the exchange platform, so that is one trade, okay, and if you leave it for settlement on the first Thursday, then the shares automatically come back to your demat account, okay. So there is no trade which has happened while coming back. Okay, so the cost, the transaction cost, or the cost which I'll be talking about when we talk of, let's say, the commissions which are being towards PhillipCapital and the other cost. So there, when you lend, then the trade is done. So that is one. Now I'll take an example of lending and recall also. So when you lend 1,000 shares, so that is one trade. Okay, and let's say you want 500 shares back, so that becomes the second trade. Okay. So there, when so let's say you have lent the shares at 10 rupees per share, and when you are recalling it is at 5 rupee per share. So there, 5 is the market price which is there. Okay. So it is based on the market price which is there. At that price, you can recall your shares back. Okay. So that is with respect to the number of trades. Coming to the cost part, so majority of our clients are on the percentage of lending fee. Okay, so we have both the structures, the cash market, the cash market brokerage, because it settles like a cash market, or the percentage of lending fee. So the percentage of lending fee is what is being preferred, because it's very easy to calculate before a trade is to be done. So that is one. Then, as I specified, SEBI charges are not applicable. Even the exchange has waived also, and the GST on that. So for the percentage of lending fee or the commercials, I would request you to please get in touch with your relationship manager or the salesperson. Then, are there any other cost involved with respect to borrowers? Okay. See, for the borrowers, they have to maintain margin with the exchange. So that is one. Uh, Second is, in case of borrowers also, a same set of in terms of transaction cost would be applicable. Yes. So I think I have answered most of the queries during the presentation. So are there any other queries which I can elaborate? Please type it on the chat box. One query which I have received. So how many stocks can participate? See, I have seen there are uh, at a certain point in time, there are 300 stocks which can participate. I have also seen, so let's say the latest one, the number of stocks is approximately 650. So what exchange basically does is every month it comes out with a circular saying the number of stocks which can participate in the SLB segment, and that is basically based on the volume of that particular stock. So and even there must be other parameters also, but it comes out with a circular saying which are the stocks which can participate, and that can be divided into one is the FNO stocks and the non-FNO stocks, and some ETFs are also there as specified. So I have answered. Is there? Yes. So there is one more query. Is can a lender recall all of the shares before the period is over? Yes, the lender can recall all the shares before the period is over. Great. So I have answered most of the queries. Even once you reflect on securities, lending and borrowing, and in case you have any further queries, please feel free to get in touch with your relationship manager or the salesperson who have sent you the invite. We can do a one-on-one call also, and also in case of any queries which are there, we can over one-on-one Zoom meeting also we can discuss on that. I hope the presentation has been beneficial in understanding the securities lending and borrowing, its features, the kind of potential alpha which you can generate by participating in the SLB segment, and also in understanding that here the counterparty is the exchange. So your counterparty is the exchange is also one of the very important criterias for majority of the investors who participate in the SLB segment. So I thank you all, and I hope this has been a beneficial session. In case you have any queries, please do speak to us, and we will help you out for the same. Thank you once again.